It's actually a contract between two parties, basically a client and a CFD platform provider like Maybank Kim Eng, to exchange the price difference of the underlying instrument. In this case, we are talking stocks, whereby the entry price and the exit price will determine whether you make profit or loss. Okay, then this will be settled in cash.
CFD, it's appealing because of its low margin requirement. So it's kind of like buying a house, you know. Instead of putting in the entire capital to buy the house, you put in only a small portion of the total money. So and in most of the, if you're buying index stocks or big company, blue chips, basically the index the requirement is only you need to put in 10%.
I would say CFD will give everyone the opportunity to trade. Yeah, for example, if the stock is too high value, let's say the Apple, and nobody want to full up the full amount just to start with one stock. So CFD will give you a flexibility to take advantage to buy a small portion of the stock in terms of the initial layout. And of course, it will be used as a hedging tool. CFD can use a hedging tool. Why I say so? Assuming you own, I take example DBS stocks. You buy DBS stocks at $10 and today at $24.46, and you see that the trend is actually turning downwards, and you do not intend to close out these stocks that you in hand because you want to keep for long term, also appreciation, dividend, so you don't want to keep. So you can take advantage of CFD to sell the stocks to hedge against your cash holding. But once a cash stock comes down to a certain level, let's say drop to $34, you can close out the CFD and make the 46 cents, and you're still holding your cash holding on the DBS stock. So that's one way. I think is give people an opportunity, alternative trading opportunity. Because you are trading on leverage, you may be lost than what you put in, which I explained earlier. If there any slippage, then you may sell at a lower price, which exceed your capital fund inside. Then Maybank Kim Eng got the right to recourse the difference from you. Okay, so you need to manage your risk on your trading over here. Most important is when you buy a stock, now you're paying a 10% margin, and this stock is suspended. So Maybank Kim Eng got the right to request you to top up the balance of 90% at a certain period of time to fulfill the 100% fair value until the stocks is unsuspended.
Okay, let's talk about a beginner first. Now, imagine if let's say taking a car as an example. If you just started off to learn how to drive a car, and assume that you never take any license of how to drive a car, never go for exam and whatever, never. I think it will be suicide if your first car is a Ferrari, you know, compared to if your first car is a Contigo. Okay, and assume you don't modify the Contigo. Why? Because a Contigo speed is not so fast. So if in case there's an accident, the impact isn't that much, you see, compared to a Ferrari. You know, if you do not know how to drive, gone. Not just the car gone, the person also might be gone also. Same goes to investing as well. CFD is a highly leveraged product. The product itself doesn't mean it's risky or not risky. Same goes to a car engine. Just because a car engine can move very fast, it doesn't mean it's bad or good. It depends on the person who is driving it. So if you are just a beginner, well, I don't think you should dabble into CFDs. I feel that if you want to get into margin, or CFDs or any form of leverage, you need to be prepared whether your portfolio can sustain a drop of 50% or not. So if it can sustain a drop of 50%, good. Then you are not using too much. So in that sense, although you have the capability to use that much, but you should exercise restraints from using too much.